Let me also now introduce and welcome Chris Galloway, Managing Director with Morningstar Investment Management Asia. Chris, welcome to India. Thank you for joining us.
Thank you.
There is a lot of global debate on what is the right way for investors to buy into mutual funds, passive versus active, distribution versus robo-advisory. What is your sense? What are the trends, and ultimately for a genuine long-term investor, what is the right way to adopt?
Yeah, I think it's a great question. I think one of the things that we're actually talking about during the conference here is timeless investment principles, and that's really trying to look at what the great investors over time have actually done with regards to their own investments. So I think there's some great advice that we get from legendary investors like Warren Buffett, for example. If you look at how he's approached investing, he's got great statements like where he talks about where he finds good companies with great management, that his best holding period is actually forever. And those are the kind of things that we are really here to talk to investors about. So as you think about how you want to invest, whether it's passive or active or in mutual funds or directly, you need to really have a set of rules or a set of principles which form the foundation of your behavior that you actually want to display as you approach investing. So, that would include things like being or thinking about long term. How long do you actually want to invest for? And I think that's one of the things perhaps has been my observation in Asia Pacific in general, is that investors tend to be more short term perhaps than we see them in other markets. So, you contrast that with the behavior of a Warren Buffett where he acquires company through Berkshire Hathaway, his own company, and he just holds them forever. And I think that somewhere in that there's a lesson. If you'd invested in his company Berkshire Hathaway back in 1965, you put $10,000 in that company, that's worth over $50 million today. So the returns to long-term investors, are certainly there. So for me, it's not so much about I think different investment vehicles, different investment styles will appeal to different investors. But it's really important to have a set of principles, if you like, that really form the foundation, for how you actually want to think about investing. Another one might be being valuation driven. And there's a great example of that as well. If you go back to Benjamin Graham, who wrote probably the book on being a value investor. When he sort of speaks about it, he talks about three very simple concepts. About the prices in markets which are very, very volatile, as being very different to the underlying value, of a company, where you can discount, the cash flows from a company and work out like a long-term stable valuation. And then, of course, really there's nothing complicated about it, but it's simply about, buying a company or buying an asset when the price is actually below the intrinsic value. And it sounds simple, and it is actually simple as a concept. The really difficult thing for most investors to do is to actually stick to that behavior. And that's really what the good investors have done. They know what to do and they stick to it.
Let's turn your presentation around. Today you're going to present out here about, again, principles for investing. Now, considering India's world tends to get a little short-term and very short-sighted in that sense when it comes to investing about 1 to 2 years. How are you going to convince the bunch here that India is a long-term story specific on the long-term money-making and not the short-term? I mean, do you feel that the India growth story is more a long-term play than a more 1 or 2 year kind of story?
Yeah, look, we do. Generally speaking, I think our presence in India is very much because we think that the country is, and the market is evolving. It absolutely, I think, is more short-term perhaps than other markets in terms of investor behavior. We definitely think that will change, and it's really about being patient. In the context of I suppose our presence. I don't necessarily think that we're here to try and convince people not to be short-term. At the end of the day, I think every investor wants to have a reasonable time frame with which to measure their investment success or otherwise. But having said that, I think that we can evidence and we can show that the longer your investment horizon is, the greater your probability becomes of actually achieving your objectives. And while you may think that being focused on the short term is a good thing, it's more likely that that falls into the realm of being speculation, right? And we can actually show, and the numbers will show, that there are very few examples of investors who have had a short-term focus who've been successful, and they're far more on that long-term spectrum who over the course of history have actually proven that by taking a long-term approach, your returns are actually
You mentioned
better.
about Buffett, but there are more examples than Buffett and Graham. You've got Carl Icahn, you've got Munger, who's again a big, who talks about long-term investing. Now, if the mantras of wealth creation are so well documented, how come world is shifting towards digital trading, platform trading, machine-based trading? I mean, isn't it counterintuitive?
Look, I mean, that's a great point. I mean, I think again on that, on that spectrum of, how information is made available today. I mean, I think decisions, you're exactly right. They can be made in seconds, in minutes, in hours, in days, weeks, and so on, right through to decades and multi-decades. I think there's a huge amount of information. We also find that institutional investors more and more control markets these days, and they tend to behave in a very similar fashion. They tend to be driven more by peer relative considerations, and underperformance for them is a very a big sort of cause for concern, if you like. So I think understanding the behaviour of most institutional investors is very, very important for the average investor to think about. They tend to be very driven by the crowd. They tend to go to the same place. They tend to invest in the same...
The
herd mentality. Yeah. Exactly. So try to think about being independent-minded, thinking a bit more about being a contrarian investor, looking away from those areas. It's often in the most unloved areas where most investors don't want to invest that your best opportunities actually are found. You think about the GFC, the big correction, big fall down in asset prices, and how most investors were paralysed and didn't want to buy. Most investors were exiting. That was one of the best buying opportunities that we've seen, in many, many decades. And it's about just thinking about that behaviour. And as Buffett says again, I'll quote him a few times probably, but all you have to do is be fearful when others are greedy, and greedy when others are fearful. And that's the secret to making money, or getting rich, as Warren would say.
Chris, can I say that India, from a global standpoint, is more like a crowded trade now? We talked about a cheery consensus in stocks, but when it comes to a cheery consensus towards global allocation, India is right up there. The other big nations, well, they are looking fragile. Money has moved out of Eastern European economies. LATAM never picked up. So India clearly seems to be the only place. It's growing. It's got great governance. But in terms of a commitment, we are right up there.
Right. I think that's right. And India, together with many emerging markets, if we look at where we see opportunities globally at the moment, emerging markets generally come across as being quite attractive, and particularly Asian-based, emerging markets. So, Japan as well as an example. We see valuations there looking very attractive. We see similar things, in countries like India, and other emerging markets as well. I think it's your more developed markets, like the US, probably the best example, where we're very concerned about valuations in that market. Similarly, Europe, So I think for many investors around the world, I mean, absolutely, emerging markets are an area, and India is certainly amongst those, where we would point to these markets as being, relatively much more attractive. So.
Yeah. Great speaking with you, Chris. Enjoy the conference. Thanks so much for taking the time and speaking with us today.
Thank you.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.